It's about that time of day again. My name is Joseph. It's Thursday evening, May the 4th, 2017. Welcome back to your nightly newsletter. We're covering crude, S&P, gold, euro, and DAX tonight. Crude is bearish with a strong, keyword strong, spike in range this evening, telling us to look for selling opportunities up above the range and a possible short covering rally tomorrow. The S&P is bullish with a spike in channel, which tells us to look for traps and failures at support levels, watching that battle zone as the bulls try to retest last week's high. Euro's bullish, but two levels of support tell us to be looking for a two-legged pullback off the highs for the most reliable buying opportunities on Friday. Gold is bearish, but we're four legs down. That's right, four legs down on the yellow metal and sitting at major support, telling us to look for selling opportunities up in the battle zone overhead or wait for a successful breakout pullback to new lows tomorrow. And of course, wrapping up tonight with the FDAX. The DAX is bullish with a spike in channel, making it easy for us to plan for the most reliable buying opportunities. We're staying patient to buy down in the battle zone on Friday morning. Got a great newsletter in store for you guys and gals tonight. Big moves continue to happen in this first full week of May. We got Cinco de Mayo tomorrow. I know down here in Los Angeles they're definitely getting ready to party tomorrow. We're going to hear from non-farm payrolls tomorrow. Big news day tomorrow, and they'll probably get you out of here early enough to go grab a Corona or two, right? Maybe finish up with a margarita tomorrow here for Cinco de Mayo. Bottom line, I got a great newsletter in store for you. Plenty of reliable trades setting up for tomorrow. Before we jump in, though, let's make sure we remind you guys the only place to watch the full-length version of this video is on our blog at Sideways Markets. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of that YouTube video. Follow that link. Come join me on the blog at Sideways Markets and grab the full-length version of our nightly newsletter. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Follow me on social media, lower left-hand corner. I'm always posting important charts, links, and updates on my many social media channels. Right below the video tonight, grab those charts. Don't forget to grab those charts and have them ready on your computer tomorrow. How easy is that? All the charts from tonight's video, you can download those charts by following that link on the blog. And please don't forget to grab your free pass. If you're not a member here at School of Trade, grab that free pass. You'll learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can guarantee you that. And don't forget, if you're brand new here to SOT, grab those frequently asked questions to learn more if you're brand new here to the blog. And don't forget, I'm always here to help you guys out 24/7, 365 if you have any questions. It is great to be wrapping up what has been a fantastic, I'll tell you, the month of April was great, but the month of May has been nonstop this first week of May. I hope this continues for the rest of the year. Great volatility, great opportunities. Like I said, been a great week here so far, but as I always remind you, we're only as good as our next trade here. Let's get ready for tomorrow. Tomorrow's Friday, Cinco de Mayo, May 5th. We're, of course, wrapping up the first week of the month. Anytime we have the first Friday of every 1 month, as long as the first day of the month isn't a Friday, is non-farm Friday. So, of course, we're expecting the big news hitting tomorrow morning at 8:30 a.m. Eastern Time. Couple things here about this. This is the major news. Nothing else really matters here tomorrow. This is the major news, 8:30 a.m. Eastern Time. First Friday of every 1 month, right? So the first Friday of the month, assuming the first month or the first day of the month isn't a Friday, right? So maybe the second Friday of the month. Bottom line is, all eyes right now are pointed at that employment situation, the non-farm numbers. Now, Fridays are always the same, early in, early out. You know, get in early, get out early. You're more than welcome to hold positions into the afternoon session. But remember, on Fridays, end of the day, end of the week, end of the month, traders take bigger risks, right? Traders get tired. They're either trading with house money or they're trying to dig themselves out of holes. So be very careful at the end of the day, at the end of the week, and at the end of the month. So we got two of those three tomorrow, right? End of the week and end of the day. So be very careful tomorrow after 11 a.m. Eastern Time. A lot of times, though, on a non-farm Friday, you know, sometimes it's a real fast burst of opportunities and it dries up pretty quickly. Sometimes we see non-farm Friday trading all the way until 12:30, 1 o'clock, 1:30 in the afternoon. We'll have to play it by ear tomorrow, but be very careful after 11 a.m. Eastern Time because, again, volume will dry up and there's a lot less liquidity and reliability in your trades. The second thing I want to talk about here for tomorrow, obviously tomorrow's not just your average Friday. Tomorrow is non-farm Friday. one of the things you want to remember is there are really two reactions around that news tomorrow, either very slow or very fast. After the news comes out tomorrow morning at 8:30, you want to be very patient. If the market comes out, if news comes out tomorrow within expectations, now remember, we heard on Wednesday morning at 8:15 from the ADP employment report, we saw a relatively dismal number on Wednesday morning. Now, Janet Yellen and the Fed shrugged that number off because of seasonality and blah, 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 blah. But the bottom line is we saw a good leading indicator on Wednesday that most traders have already priced in for Friday's news announcement. The bottom line is that if the number comes out tomorrow morning as expected, it's not going to surprise anybody. And the market will usually sit relatively quiet 5, 10, maybe 15 minutes. Stay patient tomorrow because it might just sit there and not blink for, again, 5, 10, maybe 15 minutes. Sometimes it sits there quite a while until we start seeing a new direction or continuation of the direction that we're on already. So one scenario for tomorrow is news comes out as expected. It's already priced in, doesn't surprise anybody, and it will sit there for a while, so stay patient. Now, all hell breaks loose tomorrow if the number comes out outside of expectations. We've known since Wednesday morning what those expectations are going to be. Everybody knows they are. If we come out higher or lower outside of those expectations, then professional traders have to execute plan B or plan C, right? We always go into these news reports knowing plan A, B, and C. Within expectations, above expectations, and below expectations. So if it comes out above or below, traders have to react, and of course the market will typically be quite violent. So another situation tomorrow, if it comes out outside of expectations, sit on hand, wait patiently because it'll move violently around. Give it 5, 10, maybe 15 minutes to calm down, find that new direction, right, and trade your plan. So two scenarios tomorrow, either it moves too slowly or it moves too quickly, both of which tell us careful, 5, 10, maybe 15 minutes afterwards until you start seeing some consistency. Now again, early in, early out, stay patient after that news comes out. Usually a pretty good day, though. Usually a pretty good day as long as you don't jump in too early and try to predict this thing, right? Because, again, it can be a very, very violent reaction to it. Don't forget, we're going to be in our trade room tomorrow morning, 8 o'clock Eastern time. We're going to execute this whole plan with all of our advanced members. I hope to see you guys out there right along with us tomorrow. Let's jump in. We got a lot to cover here tonight. Ahead of this non-farm Friday, we'll go crude, S&P, gold, euro, and FDAX tonight. Crude is bearish and trading inside a range this evening, telling us to look for reliable selling opportunities up at resistance levels above the range for a target going back down to retest the low. If price pushes lower, the plan is to avoid chasing the move lower, looking for a successful breakout pullback, right, for a target at that 45 round number. Now, one thing to keep in mind tomorrow is this strong move down may, keyword may, result in a short covering rally and buying opportunities on the way up into the battle zone. Now, don't try to predict this reversal, right? It's a fool's game. Wait for a successful breakout pullback and then follow the new trend once we have proof. Now, as you can see, very, very obviously here, we have a very strong bear trend on the way down. Today we saw quite a few legs lower, right? 4, 5, 6. It was very obvious that a lot of funds, a lot of large positions were unwound today, and that caused this price to tumble. As you can definitely see, this market just kept on going lower. I think the gig is up here right now as far as a rally goes on crude oil. Now, with such strength to the downside here tomorrow, really there are a couple different scenarios that we may see. Strong move down into this trading range, this market may just stay pinned right to the downside. It may go up, right back down, up, right back down, up, right back down. This market may stay pinned right to its floor. We have news tomorrow at 8:30, so it's unlikely, but that's a reality, right? That might be the case tomorrow, and if it does, right, we'll stay looking for those selling opportunities up above the high of that range. Now another possibility here for tomorrow, which is a lot more likely, is to see the market kind of grind higher, and then make that move back down. So, of course, as a seller, you can, of course, try to predict these right, moves back down, or you can wait for the market to make the turn, right, and then trade it as it collapses back down again. That's scenario number 2. Now, scenario 3, which is that short covering rally, will be where we see it chop, 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 and then bam, real strong break higher. That strong break higher is going to be your personality clue, the sentiment clue. This market now is able to be bought. First things first, though, that strong move, then we have to see the market hold a pullback. Now, this illustration obviously isn't drawn to scale. At any point, we can see this strong break up. Buyers have to hold that pullback. So when I say a short covering rally is possible, what I mean is we have to see a successful breakout pullback. Breakout, pullback, hold, and go. Once we see a strong move up, holding a pullback and continuing, then we can go looking at this as a buying opportunity tomorrow. But again, be very, very careful trying to predict a reversal right now. There is a graveyard filled with blown trade accounts that are filled with people who said, I swear it couldn't keep going any lower, right? It can keep going lower. There's a big round number at 45 waiting just a few points lower here. So this could easily keep going lower tomorrow as more funds unwind, as more positions, right, as we see more of these buyers get out of their long positions. And again, we have some major news tomorrow, so this thing could really get, right, pretty crazy here. So what are we watching for here right now? Well, usually whenever I see a market move this strong, usually what we're going to have to see is a pretty steep correction. And usually whenever I think about a steep correction, I think about a two-legged move. A two-legged move meaning we'll see the market start to go higher here, break down, pull back, and go, right? A two-legged correction, a two-legged pullback off of that low. Now, with that said, that may spur that rally that would turn to a short covering rally. But again, that's one scenario here that we're looking for here. There's a lot of different ways in which we can get this to work. Up, moving average comes over, buyers try to buy the pullback, they fail, right, for a selling opportunity back down again. Heck, it may just go up, trap high, and sink right back down like a rock, right? Again, most of the time, though, when we see a move this strong, right, we'll usually have to see a pretty good correction here. Two-legged move, use that trend line, right, to sell back down. So really right now, you're watching all of these prior levels of resistance, definitely watching that battle zone tomorrow to get price up and back down, selling high, avoiding the temptation to sell low. Now, obviously, that's if price goes higher here. What if price goes lower? Well, if it goes lower, we have a big psychological level down here at 45, and we really don't have anything down here, right? It's very much uncharted territory. In fact, today's move lower went to 9-month lows. So there's no prior week lows. There's no prior month lows down here, right? The closest thing we get to a prior day low is all the way back up, right, at 47.30. So we don't really have any other milestones. It could get a little weird down here tomorrow, again, in the wake of the major news. And again, right, as we try to find a new balance area down here below that $45 a barrel. Now, with that said, if the price does shoot lower, right, we'll look for what we call a successful breakout pullback. We saw a great example of this on crude oil today. I want to see a breakdown. Moving average goes below the low of that range. In this case, it's 34. And then the easy trade here is to just try to sell that pullback. Those pullbacks usually fail. I like to look for what I call a fake out breakout pullback or a two-legged correction, right? And then look for that move back down. Basically, it's a trap high, right? Step 1, strong breakdown. Step 2, get that moving average below that range. That's the key. You'll know if you have a strong enough breakout if you find that moving average below, in this case, 34 down there. Get that moving average below the range. And then again, don't just simply trade the breakout to the moving average, the pullback to the moving average. Look for that two-legged move up, right? And then down from there. Now, if it does, again, we got major news, right? So if it does just rocket lower here tomorrow, look for a spike in channel, look for a spike in range, look for a spike in wedge, right? Possibly a flag, right? We'll see what comes out tomorrow. But again, if we do push lower here tomorrow, again, two-legged correction off that low. Look for that spike in channel. Look for that spike in wedge. We talk about this quite a bit every night on our newsletter, and we teach all the spike in channels, all the spike in wedges. We teach all the technical analysis I'm talking about here tonight inside of our intermediate class. Now, with that said, what do we look for the buyers here? If again, the buyers would want to see a real strong breakup. That strong breakup, you really want to see it strong. The specific opportunity I always look for, guys and gals, we've covered a lot here tonight. Don't forget, if you're watching this right now on our YouTube channel, it's only a snippet on the YouTube channel. There's a link in the description of the YouTube video. Follow that link. Come join me on the blog at Sideways Markets for the full-length version, or over here on the website at schooloftrade.com. And while you're here, don't forget, if you want to learn more about everything we've talked about tonight, don't forget we get a great free trial. You'll learn all about the trading strategy. You'll learn all about the analysis we use. Grab that free trial on the homepage of the website. Don't forget our beginner course teaches all of our students how to set up their business, all the psychology, all the technology, running your business like a professional. I'll tell you right now, it took me a lot of time to learn the right way. I made a lot of mistakes early in my career. It took me a long time to learn the right way to start a new trading career. Right, that beginner course will kickstart your career on solid ground. The intermediate course, now we start learning more about technical analysis. Everything we've talked about today in the nightly newsletter, all the spiking channels, the two-legged pullbacks, using trend lines, ranges, measured moves, all that is covered in the intermediate class. And then we get together every day in our trade room. We wrap it all together with our trade setups, our trade strategy. We go into a lot of market psychology and market structure. And of course, we trade together every day in our trade room with all of our advanced members. And please don't forget, I'm here to help every step of the way, whether you're a member or not a member, right? I always want to remind you guys, I'm only a phone call or a live support click away, right, from getting your questions answered. Guys, it's been a great week here this week. Got another big day tomorrow. I look forward to seeing you all at 8 o'clock Eastern time. If not, same time, same place on Monday, right? No newsletter on Friday nights. I'll see you next time on Monday evening. If I don't see you guys tomorrow morning, that'll do it for me, guys. Be well out there. Be nice to each other. Follow that plan tomorrow. Adios, amigos. Bye-bye for now.